One of the hardest things as a trader is to be an investor. So I actually have a separate account for my long term that I don't log into. I don't even know how much I'm up or down today. I've got no idea. I only look at it at the end of each quarter. The reason why I look at the end of each quarter is if you look back on the SP 500 on every major top and every major bottom, it's always happened end of March, end of June, end of September, end of December, because you have the institutional money doing their quarterly rebalances.
Hi guys, welcome back. Today we've got a very special guest. We have David Bird, aka ASX Trader, who's back on the podcast for the second time. David, welcome back to the show.
Thanks for having me again, guys.
Didn't scare you off too bad the first time?
The traffic did a little bit, but not you guys.
It will do that. So let's give you a bit of a rap sheet. So we got financial analyst, educator, former teacher, regular columnist for News Corp, and founder of Mastering the Markets. And you just told us before we started recording that you've now got 47 staff on board. Like, how does that even
47
happen?
Paid staff in some element. Yeah, a lot of part-timers in there. But yeah, it's really grown over the last 2 years to, just faster and faster and faster, really, yeah.
Yeah, and how's the community going?
Beautiful. Yeah, 3,000 people now in the community, doing my weekly outlook, seeing how the markets are going. I think like I talked to you guys last time, I treat the markets very much like surfing. So whether the surf's good that week, that's where we're looking at. And that's what you were talking about with that post before, where I was like, well, this week's looking all right, actually. And that was, I identified that on the Sunday night, yeah.
Yeah, well, we'll jump into that post in just a sec. But we had you on last June, so a few months ago. And what we discussed was like, crypto market cycle and, geopolitical turmoil impacting markets and a range of things. But I think today is sort of the perfect time to do a bit of a refresher, where you're currently sitting, what your current stance is on, not only crypto cycle, but the broader market cycle and other asset classes. So we're here to pick your brain and dive straight in. First question, we'll cover like sort of the recent volatility. So Bitcoin dropped below 100K within, the last week. What do you make of that? Did you sort of pick it early and how are you seeing things at the moment?
Yeah, I posted about that a few weeks ago saying that Bitcoin would go below 100K. Got the usual laughing emojis and there's no way it's going under 100K.
Is that kind of how you know you're onto something?
Typically, yeah. As you know, if everyone was right, markets wouldn't exist.
Yeah.
Everyone
would be rich.
Sometimes I do little bait posts to kind of get check sentiment. How's everyone positioned right now? Are they agreeing with me? Are they not agreeing with me? So no, the market didn't do anything unexpectedly. They've definitely shown some weakness there, like that last pump up to 125K.
Yeah.
Lower in volume, lots of divergence. And one of the main things we talked about last time was the divergence in MicroStrategy. I don't know if you remember that. I talked about the fact that last time Bitcoin made a new top, but MicroStrategy didn't.
Yeah.
And MicroStrategy is leverage Bitcoin essentially. It's up, I think, 3,700% since the low. Bitcoin's up 500%. So you've got to think, well, if it's leverage Bitcoin, why has it made a lower high when Bitcoin's made a higher high at that last part? So that was something, another little kind of telltale there as well. But something in particular is, everyone's been talking about that halving cycle. And the exact day of the halving cycle, if you follow that, was that October 6-7. So funnily enough, Bitcoin topped on the exact day the halving cycle said it should have topped.
What, 18 months?
No, I think it's 1,064 days.
Yeah,
and 364 days bear market.
Yeah, okay. Because last time we spoke, you had an opinion that you don't follow the halving cycle, to a T. It's more based on election cycles.
Yeah, so what I was talking about last cycle, everyone was screaming, this halving cycle, everyone's going to get rich through, all your altcoins, etc. And I was like, they've been programmed. Okay, the markets move in 3 distinct phases, 3 up, 2 back. And we've had those kind of 3 halving cycles now where everyone was kind of programmed into, oh man, every 4 years we'll get rich, we'll buy the altcoins. But retailers didn't go into Bitcoin and Ethereum. What did they go into? They went into the small caps trying to get rich. So
using leverage.
Yeah, and leverage as well, which recently they've probably been wiped out. But I was talking to the boys out there before, and if you really stuck to those top 10, you've actually been all right this cycle. Yeah. Bitcoin, Solana, XRP, Ethereum. If you're in those top ones, you've actually been all right. They've all gone back to all-time high. It's when you've started playing down in the, amongst the trenches where you've kind of been unstuck, really.
And that's a nice segue into just your post on X recently. Let's dive into that one. I'm sure a lot of people want to hear this. but you said you're bullish on equities, you're bullish on gold, you're bullish on crypto, basically every asset class under the sun. What's the thinking here?
Yeah, so that was weekly outlook. So just this week, I just looked at everything, Bitcoin, gold, silver, S&P 500, looking at all that. And every single week, straight away, the first thing I look at is sentiment. Okay. And when I looked at sentiment, extreme fear, AAI sentiment was down as well. I'm thinking, all right, everyone's really bearish. And I'm looking at the chart thinking it's actually still in an uptrend. All we've actually had is a normal pullback.
Is this a personal gauge you take, or is this like a website you visit, or?
No, so the AAI sentiment indicator is a worldwide, one that a lot of professionals will always look at on a weekly basis. Yep. So it kind of goes out, kind of checks the sentiment. Is everyone bullish or bearish? Where do they think the market will be in the next 6 months?
Yeah.
And then you've got your typical fear and greed index that you can use for crypto as well as the traditional markets as well. Yeah.
Yep. Nice.
So it was a bit of sentiment's bearish. Charts are at a key zone showing life here. It's come back and lower in volume. And then I was just seeing reversals on the smaller time frame. So going, okay, we're going to at least be bullish this week. And then I'll check again on next Sunday to see if it's going to continue next week.
Yeah. And that's kind of like your style, right? Like you'll have this thesis, watch it go out next week, and then the following week you'll just look for continuation, like what looks healthy to keep going?
Yeah, so I look on a week-to-week basis, but I also look at the big picture.
Yeah.
So when everyone started panicking about gold and silver about 3 or 4 weeks ago when it topped, that's when I did that YouTube video talking about the fact, guys, let's look at the big picture. Let's look at the 3 monthly candles, the big, and you can kind of see, and there's 100 charts here showing it's only just broken out. You don't go sideways for 10 years, go up for 3 months, and then it's over.
Yeah.
That's not how cycles work. So when you kind of zoom out, you can actually see where you are. And I think if a lot of people did that with crypto too, they'd probably be a lot better off, always panicking on these. Oh my God, 125 down to 100, it's all over. Well, what's your game plan? People will say I'm hodling. I am holding long-term, yet they're looking at it on a daily basis.
No,
Which one are you? Are you trading or are you investing?
Yeah.
So
that's a good chat, because I remember looking at the quarterly close that came in and I was like super bullish. I was like, this looks so good. But then I was just like, anything can happen to finish off the next 3 monthly candle. You could go down for a month and a half, which is kind of what we're seeing happen right now. And that ties in nicely into one of the other points in that same tweet. You talked about, emotions play a big part of the game plan for you guys and your community, managing all that discipline. And you mentioned you only really check your longer term portfolio once a quarter.
Yeah.
So I guess that kind of breeds into just like what you just said there. Like it's all about.
Yeah. One of the hardest things as a trader is to be an investor, because when you're trading, you look at the markets on a daily basis. So you're seeing, and you're seeing usually a pullback coming.
Yeah.
But then you've got to go, oh, do I sell this pullback and then buy back in? But then you're not investing, you're trading, aren't you?
Yeah.
And I've been burnt doing that before, thinking I was smarter than the market, going, oh, I'll sell here and I'll buy back here. But then it didn't go here, it went here, and I missed it. And I was right on the long-term thesis.
Yes.
But then because I sold trying to be smarter than I thought I was, I ended up missing out on it. So it was all about just making sure, okay, I know I'm my own worst enemy. As we know, trading, the biggest thing is psychology.
Yep.
So I actually have a separate account for my long-term that I don't log into. I don't even know how much I'm up or down today. I've got no idea. I only look at it at the end of each quarter. The reason why I look at the end of each quarter is if you look back on the S&P 500 on every major top and every major bottom, it's always happened end of March, end of June, end of September, end of December, give or take a few weeks, but around those quarters, because you have the institutional money doing their quarterly rebalances. You've got earnings coming in. So they're the big things that will swing. And then you've got your quadruple riching. So your options expiring. So the market will often position itself in accordance to your options, etc. So those are the big three things that really move the market. It's the institutional money rebalancing and the options and that. So I don't need to care about what happens on a day-to-day, week-to-week kind of basis for my long term. I just need to know where it is for the big picture.
And for people like joining your community, do you usually recommend, okay, let's look at a long-term view where you're staying, at an arm's length from your portfolio, or are they more interested in the more trading aspect of it?
Bit of both. So me personally, I have 3 accounts. I have my position accounts, which is my long term, where I'm looking at the monthly and the 3 monthly. That's where, if you were to say to me, like you've just had your little child right now, someone gave you 100 grand and said, invest this for your child for 20 years time. You want to look at, okay, what's going to be going up for the next 20 years? So that's where you look at the big picture, the 3 monthly. But if you're just, what's going to make me money over the next kind of 12 12 months kind of thing, then that's where you're looking at the weekly. That's your swing trading account. But if you're looking at what's going to make you money this week, that's where you're looking at that weekly outlook, that daily picture. Okay, what's looking good now?
And I guess I want to dive into like broader market cycles because Pav and I have discussed at length, like, you know, you touched on before, like where, you know, 18 months or approximately from the halving cycle, which is historically where we've topped out, but something feels different about this time around. Obviously, we've got a lot more institutional funds flowing in. Like the whole macro environment's different. The geopolitical tension, as we discussed last time, is different. So I want to kind of get your thoughts on the current market cycle, both in crypto, but also how it fits into a broader economic cycle and how you sort of see that playing out for the remainder of the year and then into next year as well.
Yeah, so I'm kind of in mixed emotions around that in the fact that there's a lot of things pointing to 2026 being a year to be very cautious. Okay, you've got the Benner cycle, the real estate cycle. When is it beginning? Is it end? But it's kind of a year that you should really start playing defense. So then we start thinking about, okay, well, what might happen with crypto? Do we get a bit of a pump now leading up until that possible market top? Or does it stay bearish and then it continues to be bearish along with the major equity markets as well? And then that's where it then bottoms and then finally comes up. I don't have the answer. All I know right now is that the others chart is bearish. Crypto in general is bearish, but that could change next week. So I just follow the data at the time. So at the moment, Bitcoin's healthy. It's come down to a normal zag retracement. As long as it holds above 90K, it's completely fine. Above the 50-week moving average, typical zag retracement. From that bottom in 15K, every pullback has come back to that golden ratio. So Bitcoin's fine. Others, however, is a different story. They've actually been bearish since 2021 from November. And I think the biggest mistake people do is they base crypto against the US dollar, which is funny because Bitcoin was created because they didn't believe in the US dollar. They think that's going to zero. So it's funny that they actually base it on that currency. What they should base it on is what's been around for 5,000 years, which is gold. So if you actually chart others against gold, you can actually see that that was the top. And we've had that A, B, C retracement over the bigger time frame, which is what I was talking about years ago, that we weren't just retracing one halving cycle. We were actually retracing the whole cycle, which is how markets move.
Yeah, right. And then you mentioned the Benner cycle there. And I actually hadn't heard of this before, but I did a bit of digging into some articles you'd done previously. And you mentioned how you're looking at this. So this is more of an old school, you know, cycle formula, which isn't super predictive, but it's not based on news or politics. It's more like markets move in rhythmical waves, right? So I found that really interesting because it's been around for over 100 years and it's picked some of the tops in, you know, like, the dot-com bubble and even like the COVID crash and, I mean, going back to like the Great Depression, it picked some of those. How like seriously do you look at this model or this cycle and then what's it telling us at the moment?
Yeah, so it was actually invented by a farmer 150 years ago. So what he realized being a farmer is I think he got absolutely wiped out and he realized, why did this happen? What's going on? And he realized that actually the moon has such an effect on the crops. Then the crops have an effect on the animals have an effect on us. And it, the whole thing revolves around that. And there's TA titans, you've got Dow, you've got Ralph Elliott from Elliott Waves, you've got Gann, and Gann's the one which is really big on cycles and time. So he believes that markets, no matter what, they end because of the date, not because of the price or because of whatever. So yeah, which all links back to the moon or something like that. So yeah, that's the Benner cycle that has predicted Great Depression, World War II, the dot-com, the GFC, the all those ones he has predicted from 150 years ago, so he has a top coming in 2026 as well.
Yeah, saw that.
As well as the real estate cycle as well. So the land cycle, so which predicted the GFC, the 1989, etc. as well. So yeah, there's a couple of, if you believe in the cycles, that are all coming to a peak.
That's a nice timing because Trump was talking about 50-year mortgages.
Yeah.
Right? It kind of ties into something's not right. So
Yeah, right. I saw, because it said we're going to likely see a cycle top in 2026 and then like sort of like the panic crash. We'll see that in like 2034. So that made me feel okay because I was like, that's a bit down the line. Obviously, it's not as predictive as some other models and you can't just base everything off that. But
no.
It's interesting, right? And
and again, it's just, all you can do with anything you ever do is gather as much information as you can
right.
and then go, okay, I've got this much evidence. And this is what I tell my students all the time. Like, guys, you got to pretend you're in front of a judge. And, what does a lawyer do? They present as much evidence as they can why this person's innocent or guilty. You pretty much need to do the same thing with your investments. You need to present as much information as to the bull case as to why I should be doing this or should be doing that. And Tung, who's one of our specialist educators, he's worth over 10 mil now. And he got destroyed during the GFC. And then he did a lot of research around how to do it. And he said, babe, I think I can do this. I want to do it. And she said, as long as you can, everything you do, you run by me and I give the okay. So what does he have to do? He has to go and bring her and go,
take it to the
babe,
judge.
I want to invest 100 grand in Bitcoin right now. Yeah. Here's my reasons why. So can you imagine if every investment decision you had to make, you actually had to convince someone as to why you're doing it? I guarantee you'd be a much better investor.
Yeah, 100%.
But it's so easy these days. You just go buy, sell, and
100%.
You just act on emotions instead of actually data.
Yeah.
That's interesting.
Now
the next, sorry, I got lost there. I was thinking about that one. I bet my wife telling me what I can and can't buy.
Like she already tells you what I can and can't.
Just a little picture running in my head. Yeah, cool. So is there anything you're looking at next to sort of give you a good idea of like where we sit in that sort of whole scheme of where the cycles are? I mean, like you said, no one's ever going to have 100% clear idea of where here exactly right now. But what's the feel on the data that's out there that how let's say crypto's shaping up right now?
Yeah, so I was seeing bullish move this week, but I'm very big on market structure and things like that. So that was just on the 4-hourly time frame. The daily, the weekly is still down. So, one step at a time. Let's see what that 4-hour does. If it rejects at a key zag zone and goes down, then obviously it's still in bearish market structure. So there's no kind of, alt season yet. Definitely not.
Well, would you say firstly, like Bitcoin's got to go next before we can see any capital flow into alts? Like, do you have any of that sort of idea?
You mean Bitcoin's got to make a new high again before we're interested again?
Yeah.
I think until you start making your all-time highs again, people are, after what just happened, people are scared again,
How do you get them interested? Exactly.
Yeah. So, but you know what? How quickly does sentiment change?
Oh, yeah.
So everyone was so bearish last week and then one big pump. And it was a big pump. They're back on it again. Alt season, it's coming back. I told you. So that's how quickly sentiment can change. But
I think there's two people there. It'd be good to get your take. Like you've got the people that are currently in it and in the weeds, been burnt a few times and still keen to touch the stove again. But then you've got all the people that everyone keeps talking about. Oh, the next wave of adoption's coming. The new money's coming. Like I feel like that's the more harder person to sort of get to finally come into the space. And you could argue like, that's not a good thing to talk about, but they are the exit liquidity generally in cycles. So the longer it takes for them to come, probably the more road we've got to run on still. Like I'm a bit tied up in the whole duration thing now as well, but like it'd be cool to get your thoughts on that as well.
Yeah, no, this is where I think they're both correct. In the fact that if you think about the .com, everyone would have said, oh, the internet, and this is the next big wave. And they were 100% correct. However, they still had to go through that pain short term for years first before they were correct. So maybe it's something like that with blockchain is maybe the short term, you do wipe out these people and they're right in the fact that, you're the exit liquidity in the short term. But then the people saying that the mass adoption and et cetera, they're correct as well because, they're looking at the big picture. They're looking at 15, 20 years, which I would agree with 100%. I believe that we are still in that beginning phase of crypto and we haven't entered the public on the larger scale yet. So in a way, they're both right. It just depends on, again, what time frame you're looking at. Are you looking at in 1 year or are you looking at 10 years?
Is there anything you're kind of talking to your community about or you think investors should be aware of and like what to think about next, just the way the market's looking?
In regards to just crypto?
Being a crypto investor in 2025, the end of 2025?
Yeah, I think just be careful who you follow online for, there's people that are always saying alt season's around the corner and stuff like that. So you always look at their track record. How many times have they got it right or wrong? Or are they always one-sided? You really want to look at those people that are bullish and bearish. They can do both. Again, you also don't want the perma bears that are always bearish as well. And the biggest thing is make sure they've got data to back it up.
Yeah. It's not just
if
vibes.
you haven't got data, it's just an opinion. So make sure that, you can see why they're saying, not just saying, oh, we're going into alt season. Okay, where's the data saying as to why we're going into alt season?
And obviously, like you don't just focus on crypto. Your name's ASX Trader. Like you look at everything. So I know you were big on commodities recently, so gold and silver in particular. We did have Chris Tibbett on recently.
From Ainsley.
Ainsley, and obviously he's got a really good background in understanding those markets. How closely do you follow sort of commodity markets, and how does that develop your strategy in other markets as well?
Yeah, definitely. I think probably the most powerful chart in existence for the markets is the Dow to gold ratio. Okay, that shows you the massive major macro trends. So you probably heard the business cycle. The business cycle, all money does is rotate out of paper assets into hard assets. Okay, so when the government wants you spending, when they want expansionary phase, they'll lower interest rates, people spend, everything's all healthy. Then obviously that drives up inflation. And then when inflation ticks over, they go, oh, okay, we spent too much, we need to tighten everything up. And then we go into the contractory phase. Okay, and that's where money goes from paper into hard. And you've got to think, and again, this is where you've always got to think like a billionaire. If you've got $1 billion, you're already rich. You've already got everything that most people are chasing. So then what you want to do is keep your wealth. And that's why then money then typically rotates into your precious metals, your commodities, your hard assets, something that has value. But there's no point during the expansionary phase keeping it in your bank account or in anything like that, because you're making, 10, 12%, 20% growth over here. So why would you not have your money working for you?
Yeah. So in that case, like we saw gold top out probably a couple of weeks ago and then it came down. Do you see that as people rotating some of that back into paper assets and looking to invest their money elsewhere? Yeah,
another good question. So I spoke at the massive gold event in Sydney just a month ago, and right at that top, I posted a photo of the ABC Bullion lineup. Everyone's there going, okay, they're all lined up, ready to buy gold. And that's typically a top signal when the retailers come in.
Yeah.
And that's where I showed them the big picture. And I said, everything runs in waves. There's ebbs and flows. The market zigs and zags along the way. And I said that you're at the top of a wave, but still beginning of the cycle. So very much like what I was talking about there, and the fact that people saying it's just beginning, if you're looking at the big picture, 10 years are right. But if you're looking at, I'm making money over the next 3 months, different kind of story.
Yeah.
So again, this is why it's always really important. Only you know your decision when you're buying something. It all comes down to how long are you willing to hold it for.
Yeah.
And this is why it should always be money that you don't need or care about, because you just never know how long you're going to need to invest it for.
Yeah, okay. And what's your next move for crypto? Obviously, last time you touched on the fact that you wouldn't touch an altcoin unless it was outperforming Bitcoin consistently. I assume your stance hasn't changed on that.
100%, yep.
So are you just looking at Bitcoin for the time being, and still you see until we're seeing the others market outperforming?
Yeah, so the key charts I'm always looking for, and I'll be speaking about this at Oz CryptoCon, is you want to make sure others' dominance is going up. So others is all of your alternative coins after 10, so 11 onwards. And then the dominance means that it's outperforming. So if we have alt season, that means that obviously your small caps are going to be, or your small coins are going to be outperforming your large caps. So that others D needs to be going up. So that's your key number one chart. Bitcoin dominance needs to be going down as well. Okay. And then, you can also just look at your others chart, make sure you got bullish market structure on that. But that others dominance is a key chart.
Yeah.
Because if we have alt season, they will be outperforming Bitcoin, Solana, XRP, because it's easier for a market cap of 10 mil to double than 100 mil or whatever.
Yeah, absolutely. Yeah, awesome. Well, I guess we'll catch you down at Oz CryptoCon, because we'll be down there.
Yeah, it's not far away.
Shaking some hands. Pav will be kissing some babies. What he does best.
We've all been there.
But we'll look forward to that.
I think 2025 has been a rough ride for the average person, just trying to not fumble their way through the market, even just try and do it themselves. What do you think has been the biggest sort of penny drop moment for a lot of people who have tried to do it themselves, but then come to someone like your community? Not to give too much of a plug to yourself, but it's just be good to see, like, what have you seen as a common thing that everyone seems to be fumbling over for this whole year when it comes to their investing and trading?
I was guilty of it in 2017. You know, I thought I knew what I was doing, and then I get all my knowledge from YouTube and that as well. But then I realized that the people I was following were bullish, but they were bullish throughout the bull market. But then when it turned bearish, they were still bullish. And then I didn't know that at the time, So then I'm following, oh, no, they're saying it's just a pullback, it's healthy.
Yeah.
And then I end up giving everything back. So that's why I was saying it's really important that you can follow people that call it both ways and not just one way. And then again, that they're following data. So again, you've got to think, well, why were you bullish in 2025? Were you caught up in a narrative? Were you caught up in what your mates were talking about? What was the data that you were following as to why you were investing in it at that time? I always say to my guys, if you enter on data, exit on data.
Yeah.
Make sure you don't enter. A lot of times we enter on data, but then we exit on emotions. Red doesn't mean you're wrong. Green doesn't mean you're right. You got to make sure that you're following that data.
Yeah. Love that.
That's good.
So I guess our listeners can find you at Mastering the Markets.
Yeah. Just type in David Bird or ASX Trader and Facebook, Twitter, etc. as well. You can find me on there, or my website's www.masterthemarkets.com.
Cool.
Yeah.
Make sure to chuck all your links in the notes. But David, once again, thank you so much for coming on board, and we look forward to having you on again.
Legend. Thanks, guys.
Thank you, sir.
Thank you.